Good afternoon traders, Joseph here from Eightcap. Welcome to this week's Trade Zone market wrap. So if you are enjoying our content, please feel free to subscribe. We have a variety of presenters during the week, so we try to keep things fresh and some new perspectives coming through and different trading styles. So on to this week. So really this week it's been about central banks. Obviously the banking crisis continues to be a focus, but there's a fair bit of concentration on central banks this week, and we didn't really see any major surprises. There was some comments from Secretary Yellen that we'll touch on shortly as well. Gold's had a really good week. We've seen cryptocurrencies seeing plenty of demand, and the dollar continues to see a bit of a push lower. We did do a report on that earlier in the week, and we have seen a couple declines, coming in from after, yesterday we did see a bit of a fight back, but the whole week before that we've just seen pushes lower, and it's an interesting little turn of events after this very nice trend we saw here. But this does look to be starting to see some decent pressure from sellers, and we want to see if we do see any further moves lower, what happens if price does start getting back down to these demand areas here. So on to some of the things this week. So Canadian CPI came out with higher than expected on the year-on-year, but trimmed, and the CPI and the common CPI came in lower than expected. And there was a bit of a surprise in the UK. Their CPI came in at 10.4%, and that led to yesterday's rate rise. The Swiss National Bank also rose rates as expected, as did the Fed. They increased rates as expected as well. So there's no real big surprises there. The rhetoric as well wasn't too surprising, but where it was a bit of a surprise for stocks on Thursday was after some of the comments from Yellen. So we can see this move down here. So basically, she pulled out support from in terms of bailouts from the banks. Now, traders didn't really like to hear this, and we did see some pretty decent selling. But she did come out, basically after this comment, she came out and said that prepared for additional deposit actions if warranted, just to really just basically shore up the market, and that they won't let the whole thing crumble apart if things do continue to turn to the worst. Obviously, we know about the deal with Credit Suisse and UBS that came out. Now, one of the aftershocks of this deal has been the basically $1 billion worth of Credit Suisse bonds are now effectively worthless, and there is talk of class actions getting going due to that, because a lot of people own those bonds and they've now effectively owned nothing. There was reports as well that the Saudis lost, the Saudi National Bank also lost $1 billion in that as well. So the numbers on the bonds, don't get me wrong, memory says it was around that number, but all in all it was a big number, and there is a fair bit of anger around with that at the moment due to the money's amounts and what's been written down basically now to zero. So coming up this week, for the rest of the week, we do have some data still to come out. So we have comments from, we have flash manufacturing and services data coming out for the EU, Germany, France, and we also have the Euro Summit, and we have US flash manufacturing and flash services PMI data coming out early Saturday morning. So that will be the last real key news to come out this week. It starts from 7:15 p.m. Australian Eastern Daylight Time, and that runs right on through to 12:45 a.m. with the US data. The UK data will be released at 8:30, and the German will be at 7:30, and the French will be starting at 7:15. So other things really to take a look at. So obviously we touched on the US dollar and stock indices. The Nasdaq has been performing the best this week from stock indices wise, and we can still see this nice push higher. And when we compare that to the US 30, we can see it did try to get going, but it was sort of stopped, and there was a nice attempted breakout here, but we came back into consolidation. This is the area we're still really focusing on for support. We can even see this test here yesterday. It failed to really get even into it, so there is so much buying demand down here at the moment, That's a level we'll continue to watch on the US 30, and as even through this whole crisis, every time sellers have tried to make a run through there, it's been not only rejected but pushed higher on a couple of occasions, and that last push higher really led to that push out, but that was cut short by some worry around comments from Yellen. But for now, we saw yesterday a little bit of a stalemate here, and we'll see what happens tonight. If we do see buyers try and come back into the market again. But if we look over at the NDX 100, we can see there's a lot more confidence in the market. There is some key resistance though that has been holding traders back. It's really anywhere above this level here at 12,768 to 12,770. That's really been keeping a lid on buyer moves, and we've seen a couple of moves push back, and that goes back to February. So we would like to see that level really cleared to tell us that this run here, which has already formed a nice higher low, is going to continue higher, and could we possibly see a move back up to test that 13,000 area. Gold has been another a star performer this week with a lower US dollar and uncertainty in the banking sector at stages during the week. We did see a pretty sharp pullback, but it's been followed up by 2 strong days of buying, and price got back up to the 2000 level yesterday. We saw a nice move into the 2000s earlier. We are wondering now if 2000 is going to become short to medium, short-term resistance at this point, but we'll have to just see what happens next. So we can see this is a previous resistance point going all the way back to really when the war broke out with Russia and Ukraine, and that initial surge back into gold. That was that really big lower high that I won't say started the downtrend, but it was a bit of a warning signal, and then we did see that downtrend kick off from there. But from this point here, we've really just seen one-way traffic, and we are wondering now if gold can take that next step, get back into the 2000s and close, and then could we see then a new push up back to 2050, these areas here that weren't seen since early 2022. And oil also has caught our attention. So oil has had that real strong breakout from this range. It was a lower breakout. We are seeing a bit of a pulse higher. We have had a bit of a rejection bar here. So will we see another test lower to sort of test this support here? And that support is at that 66 area. There's a lot of demands we can see on down to 64.20. So we would like to see if sellers do get another run going. At the moment, the market is trading high, but if we do see a break of these lows here, will we see new support coming there? And if we don't see a test and we see another push higher, really from 71.50 all the way up to 73.50, and even up to this area at 75.50/60. This could all be new resistance points, but as we can see here, there is a bit of resistance sitting on the short term at that 70.50 to 71.40 area. So that'll be the first area that buyers will need to break to show that they do have control. And if we do see a pullback, we'll be looking to see if support can come back in at this level down at 66, even to 66.25/50. So cryptos have been very firm again this week, and Bitcoin continues to lead the push. We did, like with gold, we did see this initial pullback. There's a bit of news in El Salvador today as well about tech companies and any type of startup. They're going to have tax implications waived. So if this could also have a bit of leeway, especially on the Bitcoin front and with other crypto startups, just giving them some support and some access there to help with that business get off and going. So we'll continue to have a look at that one as it develops. That was a headline today. Now, China's also been seen as being a major demand factor for oil, and I think there's been forecasts that could be up to 40% into next year. So as China continues to open up, they do see their oil demand picking up quite dramatically. So that could be a big support for oil. We haven't really heard anything too much yet with prices trading under $70 a barrel, but we'll continue to keep seeing if we do hear anything from OPEC about the price. But back to Bitcoin in terms of its chart pattern, we can see here we had this initial run, continues to run off that single bar pullback, and we do have a fair bit of resistance up here above 29,489. So sorry, 28,489. We were wondering if we could see 30,000 this week, and it got quite got rather close. It got all the way up, very close to 29,000. But we still do have some time left this week, so we could see another attempt to push higher. So a lot of talk at the moment is has Bitcoin crossed the line? Have other cryptos crossed the line? We'll focus on Bitcoin because it's been really leading the charge during this whole banking crisis. And they are now wondering if Bitcoin has become a type of digital gold, which was always really thought to be. I think with the weaker US dollar, that's been definitely helping it this week. And as the dollar's been coming off due to the banking crisis, I think it has made Bitcoin a lot more attractive, as with gold. But they're both quite expensive assets to pick up at the moment. So gold, might only be just under 2,000, but Bitcoin definitely is starting to put on a bit of weight again. And considering it wasn't too long ago that it did drop below 20,000, for it now to be back up, getting really close to 30,000, is a bit of a testament to demand for this cryptocurrency at the moment. So some of the other cryptos, they've all been going up, but they haven't been doing exactly what Bitcoin's been doing in the top 10, top 5. So Ethereum is also looking quite nice, but it just doesn't have that same, it's sort of like the S&P and Nasdaq, it just doesn't have that same upward drive that we're seeing in Bitcoin at the moment. So to me, it definitely looks like Bitcoin's regaining that crown in terms of the most demanded right now. And we'll continue to see if that can happen. And we'd like to see 30,000 reached again. We can see it's broken above this long-term resistance and holding above it quite nicely at the moment. This is going to be the next real, probably testing point for it. That's 31,000 and down to, around 30,270. So it does have a little bit more work to do. There's a lot of selling going on around here, so we just need to see if buyers can maintain that drive and just keep pushing higher and see if we can break back into the 29s and hopefully to the 30s. So we will have a look at what's coming up next week. Obviously, the banking issues will continue to persist. Any fallout from Credit Suisse and the UBS deal, but I think a lot of that's sort of factored in now. It's sort of been digested. But coming up next week, there's daylight saving shifts for Europe, so that will be coming in on Sunday. Governor Bailey speaks on Tuesday and twice that day, so 4 a.m. and 7:45 local time, Australian Eastern Daylight Time here in Australia. And we have CB Consumer Confidence coming up, Australian CPI, which should be quite interesting. The RBA are looking to hold rates. That's sort of the rumours at the moment. And if CPI does come in higher than expected, like we did see with the UK CPI this week, that could cause some short-term issues for the RBA. But if we do see it continue to drop, then you'd think that the next RBA rate pause may even start to be priced into the market if CPI does drop. And coming up on Thursday, so the German prelim CPI is coming out as well, and then we have unemployment claims in the US, and to end the week we have Canadian GDP and the core PCE price index from the States. So that one definitely will get some attention, just with the continued inflation story and what how the rate rises are sort of sorry for that pause, and how the rate rises are actually what action they're actually starting to see, the Fed starting to see from the current rate rises, if they're starting to take effect and start doing what they've been intended to do. So I suppose one of the questions will be now is, the Fed did put rates up by 0.25, will we continue to see that? Or if we could even see potentially a hold, but I think most will be looking for a 0.25 increase. So that's really it for this week's wrap. So we hope you enjoy your weekend, and all the best for the rest of your trading today. Definitely keep your eyes on some of the PMI data that's coming out for the remainder of the day. So thank you very much, all the best, and bye for now.